It can feel overwhelming and like too much if you're looking to buy a home for the first time. Maybe you're renting and you think you can afford a home. Maybe you're thinking of moving out of the starter home you bought years ago and have outgrown. Before we get into buying a home, steps to follow, documents you need, and renting versus buying, why don't you go ahead, like and subscribe, and don't forget to turn on those notifications. It helps us continue bring great content your way. Now that that's out of the way, let's jump right into it. When should you rent versus buy? This is really a personal question. Are you at a spot in your life where buying makes sense? For example, did you just get married? Are you thinking of starting a family? Is having and working on a home important to you? There can be a lot of factors to think about, but some important ones can be money. Do you have enough for a down payment and can still afford closing costs? Some people think they can spend all of their savings on a down payment and then they can't afford closing costs or to furnish the home they just purchased. Take an honest look at your bank account and what you make. Does it currently make sense for you to buy a home and put 10 to 20% down as a down payment? Can you afford the monthly payments while also maintaining the home? Location, location, location. Are you at a spot in your life where you're going to stay there for a while? If you're a recent college graduate and you're thinking of leaving the town in a year or two, does it make sense to buy? It might be easier for you to rent for a year or two before you settle somewhere. Or the opposite. Did you just move for a dream job and plan on staying there for the next 5+ years? If so, then buying might be the better option for you. Buying versus renting, mortgage versus maintenance expenses, etc. While buying sounds like a great idea, there are a lot of hidden expenses. It is true that it's usually better to have an asset, and owning a home would give you a highly valuable asset. But one drawback would be maintenance costs. When you own a home, maintenance is on you, the homeowner. There isn't anyone else there to cover the costs. Whereas when you rent, the landlord covers the costs of repairs. This might not sound like a big deal until you realize the price of some repairs. Let's take a look at some. It's common to have to replace your roof at some point in home ownership. It's just something that happens. A typical roof replacement can cost anywhere between $5,000 and $11,000, with an average of $8,000. If you own the home, that all falls on you, whereas if you're renting, you're not liable for the cost of repairs that you didn't cause, and since you didn't directly damage the roof, I hope, you won't have to pay for it. Steps to follow. 1. Make sure you're really ready. Understand that it's a big deal and a real commitment to buy a house. 2. Get your finances in order. Budget and understand what you can and cannot afford. 3. Make a plan for the down payment. We'll get more into this later, but typically 20% of the house's price is the down payment. 4. Find the right mortgage. There are different types of mortgages. A conventional loan is a mortgage that isn't guaranteed by the government. FHA loans are mortgages backed by the Federal Housing Administration. VA loans are for active or former military members. Jumbo loans are mortgages for houses that are more expensive than standard lending limits, 15-year or 30-year terms. Most mortgages are 15-year or 30-year loans, and each one has benefits and drawbacks, so it's important to figure out which one works best for you. 5. Get pre-approved. Apply for a loan from a bank and get pre-approved. This will allow you to know your budget. 6. Find a real estate agent or start shopping. Either you want one or you don't, and that's up to you. Maybe you have a specific neighborhood and you are only looking there, or you already have a home in mind. 7. Make an offer. This is when you officially offer on a home. 8. Get your mortgage. Yes, you've been pre-approved, but now that your offer has been accepted, it's time to get your mortgage. The bank will need specific documents, and after its completion, it will need to be underwritten. Underwriting involves digging deep into finances and ensuring that the mortgage can be paid. 9. Get homeowner's insurance. Get an inspection. Have home appraised/close. By getting homeowner's insurance immediately, you cover yourself in case of any damage or God forbid destruction. An inspection is a must to ensure that there isn't anything wrong with the home. We talked about replacing a roof and how expensive that can be. Without an inspection, your new home could need a repair like that. With an inspection, you're ensuring the home is in good order before you close. Having the home appraised guarantees the lender that the home is worth the amount they're giving. It doesn't make sense to give a $500,000 loan for a home that's really worth $250,000. And finally, close on your new home. Sign all the documentation and get your keys. What documents do you need to qualify? Typical documents you need to qualify for a home loan are: this is a paperwork-heavy process, so get ready to do a lot of uploading. Typical documents you need to qualify for a home loan are W-2 forms from the past 2 years, possibly more if you've changed employers, pay stubs from the past 30 to 60 days, proof of other sources of income, including documentation of any gift money, federal income tax returns from the past 2 years, recent bank statements, usually for the last couple of months, details on long-term debts like car or student loans, ID and social security number. The bank will use all of these documents to determine what you can and cannot afford. After careful inspection of the documents, you'll be pre-approved for a mortgage. Should you get a real estate agent? The right real estate agent can make a world of difference. They not only know the ins and outs of the market, but they also have an up-to-date roster of listings. They will be able to show you what just came on the market and what's been there for a little longer. It's recommended to use a different real estate agent than the one that the seller uses. You want to use one that will negotiate for you and have all of your best interests in mind. It's also important to understand that the buyer's agent is generally paid by a commission by the seller, so you won't be on the hook for paying them. While you want to be able to find a home and negotiate on your own, with the know-withal that you wouldn't actually pay for the real estate agent, there's really no reason to get one. They are professionals and understand the ins and outs of a complicated market. Make things easy on yourself and sign on with one. What's a good interest/loan rate? While the home market has been increasing, so have the mortgage rates. Right now, at this time, a mortgage rate below 5% is a really good rate. There is a lot that goes into an interest rate, and just like other loans, the better your credit score, the better the interest rate. That's why it's so important to take care of your credit score and continue to grow it. It's important to understand that interest rates are always changing and can even change day to day. Different borrowers will also offer different interest rates, but it's important to understand what you can afford. When deciding between a 15-year or a 30-year mortgage, it's important to look at the monthly payment. If the 30-year loan is a far more comfortable monthly amount that allows flexibility, then the added interest might not be a big deal. If you can easily afford the monthly payment on a 15-year loan, then the 15-year loan might be best. Sometimes people forget how valuable flexibility can be, so it's important to understand your budget. Do you need 20% down to purchase? VA, FHA, conventional, etc. While 20% is typical, there is no amount that you need. There are even loans like the VA home loan where you can do 0% down. There are also different programs to help with down payments. It's important to educate yourself on your state's programs and benefits. What you will need are closing costs, which can be 3 to 6% of the purchasing price. To summarize, there are plenty of options to best fit you and your home loan, but before figuring any of that out, ask yourself if you're ready to buy and if you can afford to buy right now. Understand which loan you want and what you'll need to do in order to obtain it. Follow our simple steps and get out there and purchase your home if you're ready.